It could be the economy's Achilles heel. Inflation is looming as Australia's homegrown headache. Prices rose more strongly than expected in the June quarter, and more disturbingly, underlying inflation did likewise, leaving the Reserve Bank with an interest rate dilemma. Will the RBA's inflation fighters be forced to put up interest rates against a backdrop of global upheaval over debt? Here's Philip Lasker.
The inflation number may have taken the trading rooms by surprise, but on the streets it's a different story.
I think price of things are going up generally everywhere.
You've got family, you're always mindful of price increases.
Prices rose 0.9% during the June quarter, leaving the annual rate at 3.6%. The biggest increases came from fruit, especially bananas, the medical sector, petrol and, surprisingly, clothing and footwear, although that seems to be mainly jewellery prices. The federal government blames the Queensland floods and its impact on food prices.
What we have to be aware of is that these events are one-off events and they have a one-off impact on the CPI. This is particularly evident in terms of fruit and veggies, but that's not the only impact we see in the CPI today. We're seeing higher global oil prices feeding into higher prices as well at the petrol pump.
But contradicting the Treasurer, the Reserve Bank's measure of core inflation was also up by a stronger than expected 0.9%, suggesting the price pressures are more broad-based.
Importantly as well for the RBA, this print today is coming above their expectations. So inflation is picking up, and it's picking up at a faster pace than even the RBA thought at this point of the cycle.
The numbers saw money markets pare back their bets that interest rates might actually be cut this year, but the bet hasn't totally disappeared.
Whether or not that reflects people's ongoing nervousness about events offshore, but we hear a lot from the RBA next week. They have their board meeting on Tuesday and they put out their quarterly statement the Friday after. If the rhetoric in that statement really starts to sort of show increasing concern about the inflation outlook, then I would expect the market will no longer be pricing in some chance of a rate cut before year end.
But can the Reserve Bank put up interest rates with so much global anxiety about American and European debt?
It's trying to balance, I think, two very difficult factors. At the end of the day, we think that the domestic considerations and higher inflation will win out, that they are likely to deliver a hike at the end of the year. But we don't think it will happen soon just because there is still so much global uncertainty. That should probably keep them on the sidelines for a bit longer.
The foreign exchange traders weren't waiting around. The prospects of higher interest rates sent the Australian dollar above 110 US cents to a new 29-year high.